All right, so my name is Bruce. I'm a principal and senior trader at Traders for Traders. And this is a webinar on economic data releases, preparing for those economic news events, and interpreting the data. Okay, so just kind of give an overview here. Traders for Traders, we look at a lot of the fundamental analysis, right? And we make our decisions based on central bank sentiment, economic data, and geopolitical events. All right, and obviously this is a webinar on the economic data. So why do we do this? Okay, well, fundamentals move the market. Okay, this is critical because if we know that the central banks look at the fundamental data to guide their monetary policy. And also, too, if we look at any chart, we can see that this is an older chart here, but you can look at any of the massive price swings for the majority of the time is based upon fundamental data. Okay, so that's kind of a challenge to you guys. You can go back and take a look. Why did a move take place? And it's mostly majority of the time it's due to fundamental news that came out, and then we look to the technicals as entry points based upon fundamental direction. Okay, so anyway, let's start to get into some of the economic data here, and I will go over how we prepare for some of these events. Okay, so first off, why do we look at the economic data? Okay, well, the economic data gives insight, direct insight to the strength or weakness of the economy. Okay, and when we're trading currencies, we're basically trading one currency strength or perceived strength against another currency's perceived strength. Okay, so that's these economic releases give direct insight to that strength or weakness. Okay, and it's like if you're trading stocks, you look at stocks. You'll look at the quarterly earnings, which is actually quite topical at the moment. But they give insight to the strength of that various company. It's just with the currencies, you're looking at the actual entire economy. All right, so. That's why we look at the data, okay? And then we'll dive into this. I was considering going over and preparing for an upcoming event for the week, and we do have a few that are upcoming. We have the GDP numbers out of the UK. Okay, that's tomorrow. But I think. It might be more beneficial to go through an event that we actually covered just yesterday, and that was the from the U.S. economy, the CPI, and just that way I can kind of follow through, and we can see some of the price action that took place after that event. Okay, so that's what I'm going to do. And looking at this, first off, the most important thing is when looking at economic data is to get an overview of what's going on out there, right? And the best way to do that is you come to any of these calendars. FX Street has quite a nice calendar here, so we'll go through this one, and just filter through, with the filter button up here, looking at the various important releases. Okay, because it's critical to look at the important releases that give us insight to what's going on out there in the economy. As you look through the calendar here, I mean, there's all sorts of news events, okay? A lot of these, though, they're not really going to move the market, okay? So you have to kind of understand which ones are important and which ones aren't, all right? And in general, the way that we look at it at Traders for Traders is the interest rates are that's the king of the pile there. It's like that's the main event. Okay, anything that central bank decides on with interest rates, that is the main event, or any sort of central bank action is the main event. All right, and then anything that relates with the central bank, like any sorts of news, speeches, anything like that, that would be secondary. All right. Then it comes down to the GDP, the gross domestic product, then inflationary data such as the consumer price index, retail sales, purchasing managers index, that kind of data. And then it comes down to the employment data. All right, that's critically important as well. It's a little more tricky to prepare for and trade because it's a two-part release, and it also it's important to get understanding of the various countries and the way that they handle these events, right? Because in the UK, for example, it's a little different than it is in America. And the best way to handle that is you've got to come in here and you've got to click on the event and you have to start reading about it. Okay, so like if you come down here to let's look at trade balance. All right. Out of Swiss, all right. There's just a little synopsis here. Read about it, and then get an understanding of what the event is and how to its importance. Okay. So anyway, the two-part release with the employment is tricky because you have the employment change as well as the unemployment rate. That's usually the way that is handled. And you can actually have, we've seen this happen several times, strength in the employment data, but actual weak employment rate number. All right, so you get kind of a push and pull, and you don't really have any sort of clarity on the event. All right, but anyway, those are the main releases that you want to be aware of. We also have consumer confidence, and then we have housing. Okay, so it's not an ordered list. GDP is more important than inflationary data or housing or whatever. In general, housing is on the bottom. However, it can be more topical, and it could give insight to strength of the economy at certain times. And that's where it's important to understand that. And the best way to prepare for that is to start reading some of the news out there from any sorts of news sources that can cover financial markets, Reuters, Bloomberg, whatever, FX Street, Yahoo News, whatever it might be for you. All right. Anyway, the way to filter this in the economic calendar is the volatility measure here with the exclamation points is best to start off really easy, okay, and start with the most important events, all right, and then we'll filter that. And this is for the week, and this gives us insight to what the important events for that week are going to be. Okay, so a lot clearer, a lot easier to read, and you can see what's happening and what traders are most likely going to put more weight upon as these events start to unfold. Okay, and we can see that you can go back and take a look at some of these events in the chart where they took place, and you can start to see the movement that took place. All right, a lot of we saw some of the Chinese news, and that affects the Aussie dollar, for example, and then we saw a lot of volatility here just yesterday with the Bank of Canada. Okay, so anyway. This gives us the insight to just in general the main issues or data releases for this month. All right, and then we want to also come back and we'll show the filter again. Now we'll start to prepare for an event. All right. So and how do we do that? All right. Let's go back and filter and put in a little more data here to give an idea of what's going on. All right, and let's take a look at this consumer price index from yesterday. And this was the event, 8:30 a.m. New York time here. And the first thing you want to do is look at some of the previous data that came out, the important releases before this event. Usually there's European data, and how did that affect price of various currencies, and how did that play out? I mean, this is going to affect the and kind of taint this release, all right? And that's what we want to get insight to that, all right? And so, have a look at some of the things that are coming out beforehand, and how price reacted to them, and that's going to have an effect on that release as well. All right, and then you also want to take a look forward. All right, we had on this release here, we had at the same time, you can see here retail sales coming out of Canada. All right, so there was an opportunity here. All right, if you had a strong number out of the U.S. And you had a weak number with retail sales, which is exactly what happened, well, you're going to see a dollar CAD strength, right? And that can set up your trade to look for and kind of focus in on. Well, let's take a look here. All right, so we'll jump into to dollar CAD, and this is where that release took place. Okay, it's right here. All right, and this is where CPI data, we saw a bit of strength out of the U.S. and we saw some weakness with the dollar CAD. Right now, this is one of those caveats you have to be very aware of. Although that was the case here, well, what happened next? All right. Well, we see the big drop here. All right, and then it's just been going kind of bashing around sideways. Well, you have to be aware of this. This is why you have to look forward, all right, as well. We have the Bank of Canada interest rate decision. This is the main game, all right, as mentioned previous. You need to be aware of and look for, all right, because that's going to happen at 10 a.m., an hour and a half after this retail sales and CPI data. Okay, so what does that mean? Well, it means get out of your trade before that Bank of Canada release. Okay, all right. So. So that's looking forward, looking backwards, and filtering kind of the data for the week. So basically, you're setting up here is just getting an overview of what's going on out there with the economic data releases. All right. So now, as the event approaches, we'll start preparing for that. All right. So I'm going to prepare for this consumer price index. And go through this with you guys. All right. The first thing to do is, take a look here at it and get the click on it here. All right, and you get a drop down, and I think it's important to understand what's going on with the release. So read about it, understand what it is, and then look at the actual. Well, you're not going to have the actual, before the event, but you want the consensus. Okay, so it's all about actual versus the expectations. Okay, so if you see variance between the actual and the expected, that's when you're going to see price movement. Okay, so that's where the trading opportunity exists. Anything that happens outside of expectations will make price move. All right, especially with these major releases. All right, so get a feel for that to begin with, and then I think it's important to look at also a lot of the other data. This was kind of a complex release in the sense that it is only one number. I mean, but there's several different releases that happened at the same time here, right? And they're all consumer price index, but one's a yearly number and one's a monthly number. All right, the traders in the market react to the monthly number first. Okay, so that's important to know. All right, they have the knee-jerk reaction with the monthly number first, and then they'll look at the yearly numbers. Okay, the yearly number is filtered here as being more important than the monthly number, but that's not really necessarily the case here. Okay, monthly number rules in this case. And then we also have the core numbers that are coming out at the same time, okay, for the monthly and the yearly numbers. Okay, and it's important to understand what the core number is in relationship to the regular number, and get some definition and meaning about that. Okay, you can click on that again and read it, but basically it's the consumer price index number minus the food and energy costs. Okay, because the reason that they do this, economics or economists do this, is that the volatility in the food and energy can skew the data from consumer price index pretty wildly from month to month. Okay, so in fact, this is a good example here. All right, we can see that the consumer price index monthly number was 1/10 better than expected. But if you take away those food costs and those energy costs, you're seeing actual bad number here. Okay, it's actually 1/10 less than expected. All right, so and that taking a look at the yearly numbers here, we can see that they're rather on par. We have 1.7 versus 1.7, and then a little bit better here on the. This one's on par, right? But a little bit of strength here with the yearly number is 1/10 better than the expectations. Okay, so you start to assess this. What does this all mean? Okay, yeah, it basically means that a bit of strength. I wasn't too happy with this core number here, but the way that the market started to digest this and look at the data here, they basically view this as being bullish. Okay, and we can see that play out in price action. So let's do that. We'll just take a quick look over here, and one of the things that we do when we start to trade these events is we need to go through the chart and start to look at what currencies are best set up for us to trade. Right, so you can look at crosses. You can look at various economies. Let's say there's a flare up in Europe, with like we've seen several times recently with the Ukraine news happening in Russia. Well, maybe you want to stay away from the Eurozone. All right, maybe you want to trade something else. You can look at dollar CAD, Aussie dollar, or dollar yen. All right, so looking at the various setups, you also want to look at however you trade technically. Okay, this is not about technicals, but however you trade technically, you want to look at what is the best setup for you. All right, so looking at euro dollar here, and then looking over at dollar yen. These to in our eyes offer the best technical setups that we were looking for, and that's what we're looking to trade. All right, and we can see the reaction here. Okay, this little gray box here. This was the data. We saw some dollar strength, yen weakness, and then it just kind of went sideways for the rest of the day until today, where we see that start to resume again, and we see the dollar strength based upon we can see this all started here with this CPI number. Okay, now the follow through is different stuff, but anyway, you can see that happening. All right, and then you start to readjust your technicals. All right, so the whole idea here is the data release started to give the fundamental direction. Now you start to look at your technicals, however they may be, to give you the direction with the entry. All right, and you start to look at that. If you look at trend lines, then you can see that it's played directly off that. Okay, and you can see that these would be some rather nice entry points to go with that fundamental theme. Okay, if you're looking at horizontal lines, you can also with the dollar yen here, you can just draw that in, and you can start purchasing dollar yen on pullbacks to continue with this bullish dollar sentiment. Okay, so that's how you integrate a lot of this into your trading plan. Okay, now it's just that. So we've looked at this, and we're looking at just the start of how to prepare for this event. Okay, more background information is needed. It's just not as simple as the actual versus expected, and then also looking at the bits and pieces here with the core and trying to assess all that data as well. It's best to start to look at this holistically and start to get a better view of what's going on out there in the U.S. economy. All right, and how you do that is, again, through filtering the data. All right, so come up to your filter, and what we'll do here is we'll select none of the countries, and then we'll just select the United States. Okay, we'll select all of the categories here for data, and I'm going to filter it to just the most important releases, and I'm going to go through this rather quickly. You can filter in more data if you like, but this will just, for sake of clarity for the webinar, we'll just use the most important data releases. And now we also need to select times, okay? And let's just go back. It's October, and we'll go back to, let's say, mid-August, all right? And let's filter this data. Okay, comes up. And now let's scroll down here, and we'll start with most recent data and get a feel for what's going on. All right. So, okay, here we are here. This is, let's see, yeah, this was yesterday's consumer price index. All right. First things first, let's look at that previous consumer price index data. Okay, so actually this is the yearly number. Okay, I want the monthly number, but just to make things a little quicker here, we'll just look at the yearly number. And let me show you what I did. Okay, so click on the event, brings up the event. Now click on get more information about consumer price index. Okay, that opens up a new link. Okay, and FX Street has done quite a nice job here. What I look for is previous history. Okay, and I want to see strength and weakness from the consumer price index, and looking at the actual versus the consensus, and what was the outcome. All right, so a little bit better than expected here with that September number. All right, but in August we saw a drop. Okay, so a little bit of weakness there. Worse than expected by 0.2. Okay, on par. And now, this is the yearly year-over-year number, but anyway, you start to get a picture of what's going on with the consumer price index, all right? And it's kind of wishy-washy. It's kind of across the board, and that fits into a bigger picture of what traders and analysts are worried about, and that's inflation, all right? And are we still kind of in this deflationary area, or are we starting to see strength? And are we starting to? We've heard several, talk about raising interest rates in all of the news, and they're looking at trying to figure out when the Fed may raise their interest rates. Well, I mean, this is where we're going to find that out. Okay, it's going to be within the data. All right. So anyway, that's consumer price index. Let's take a look at some of the other data here. Here's the retail sales, okay, monthly number, and we'll click on that. That'll open that up, and we'll look at retail sales. And here's the data. All right. So what did we just recently have? Less than expected by 0.2. All right. Month before that, on par, a little bit better in July. And a pretty bad number here in May. Okay, so it's off 0.4. So again, like a bit of strength, we thought we'd see some strength coming out of here, but no, it's not really necessarily the case. So now we're starting to see this kind of wishy-washy behavior coming out of the U.S. economy. So what's going on out there? I mean, we're starting to assess the picture and starting to put together expectations of what the Fed might do at the next meeting, which is next Wednesday. All right. Let's take a look at the employment data here at the non-farm. Okay. Click on non-farm. Get a feel for what's going on out there. And yeah, here we go. Now this one's been all across the board as well. We see a fantastic number here in September. Okay, 248 versus a consensus of 215. Great number, but the month before that, 180 versus 225. Okay, so a bad number. So some volatility here, back and forth, you can start to get into the nuances of this stuff too. I mean, these are straight numbers, so this is rather clear. Okay, bad number here in July as well, but a fantastic number in June. Okay, so there's the market is going to react to the number, and this is where we're starting to see the volatility. Is like swings one way, the data comes out, a swing the other way. Right? It's not clear. There's no clear kind of direction yet, and you can start, like I mentioned, you can start to get into the nuances of some of this stuff with the data because economists or analysts and traders start to look at, okay, well, the number's great, but we're not seeing any wage growth. Okay, so wage growth is another piece that fits into the employment data. You need to see good numbers here from the non-farm, but you also need to see wage growth. Okay, if you don't see the wage growth, then all of these jobs added are basically just going to be a bunch of kind of crappy jobs, and we're not seeing any sorts of if we don't see wage growth, then we're not going to be seeing inflation. Okay, so we may see more jobs being added, but we need to see the other aspects that affect the inflation. Okay, and wage growth would be one of them, and the other one is the participation rate. Okay, because without a strong participation number, then the actual non-farm number is going to lose some of its impact, right? So anyway, then you get the idea here. You start to look at the important events and start to assess what's going on out there with these important events that I had mentioned earlier with GDP, inflation, the CPI, retail sales, and the employment data. Okay, so that starts to give you that holistic picture that I had mentioned. Right now, where does that all lead to? Is like setting up your kind of expectations for the trade. To get that kind of bigger picture of what's going on, it's still good to go back and review the latest FOMC statement or state bank statement. From the economy that you're looking at and the pair that you're trading, okay? And get an overview of what's going on out there and how they might react. And the reason being is that when you can start to extrapolate this data into the press release, okay, from the various central bank, you can start to ascertain what how that central banker might react at the next meeting. Okay, so if you I'm not going to read this, but I did want to go through and just find that one passage in here that this highly accommodative stance of monetary policy remains appropriate. Okay, so you can see it right here, right? That's been their outlook. That's been their direction, Yellen's direction of remaining very accommodative and waiting for the data to give them insights to guide their monetary policy. Okay, it's right here in the statement. Okay, so now looking for that trading opportunity, you start to look at the consumer price index, and start to put this all together, and look at the chart, look for your technical levels, and that's basically it, right? This is getting that big picture together, and going with the strength of the currency in the economy, and how other traders and central bankers are going to react to it. All right, so that's pretty much it. Any questions? How is inflation related to interest rates? Okay, well, that's a good question. But the higher inflation is going to have a direct relationship to interest rates. Okay, and this has been kind of a very interesting time for that, because we've been in a deflationary area, and we've seen the quantitative easing to try to rectify that. And is it working or not is a fantastic question. Anyway, when you see inflation, what in general, outside of the quantitative easing environment, the way that central banks have used the interest rates is they used it as a tool to control inflation. The way that they use it is that if there's inflation in the economy and prices things become more expensive, basically it usually signifies the economy is doing pretty well. Okay, it means that there's wage growth. It means that there's employment, and the economy is usually doing pretty well. How the central banks will relate to that is they will set the interest rates, which will cool that economy down. Okay, if they set a higher interest rate, okay, it's harder to it costs more to borrow money, and if it costs more to borrow money, then business corporation will be less likely to expand at that time because it's going to cost them more. All right, so they may make a decision to kind of hold off on expansion, and part of expansion would mean employment. Okay, so they may hold off on some employment, and then you'll start to see the economy cool down a little bit. Okay, so that's one of the way that inflation relates directly to interest rates. All right, which time frame do I trade? We look at the 1 hour charts. It gives a pretty good overview of the week and the day, and also a lot of the bank traders they focus in on the 1 hour and the dailies. Okay, so it kind of filters out a lot of the noise that you'll see in the smaller time frames. Okay. All right, guys. That's pretty much it. If there's no more questions, I gotta go over a few things here. Let's see, we've got one more question, Barath. Okay, just a second here. Just a little bit of promo. Just if you guys want to take a look at some of the programs that we do offer, these are the steps that we go through, and the way we do our training. This is how I was trained, and we have a bunch of different programs out there. We have a training program. We have alerts, and then we also have this ability to start trading with money from us. All right, so it's basically a trading floor, and take a look at the T4T website and for more information on that. Okay. All right. Let's see here. What else? Can you show us some trades? Well, yeah, FX Bookie. This was one of those trading opportunities right here. Okay, with this dollar yen, and also too, I want to get into this a little bit. Okay, well, why dollar yen? Okay, he's usually pretty slow mover, right? But the pair to trade is pretty essential within this process as well. Reason being is you don't want to trade like I don't know, a Swiss yen or something if it's U.S. data. Okay, I mean that's pretty clear. It doesn't make any sense there. However, like I had mentioned, you want to look at the pairs where the interest lies. Okay, and looking for the cleanest and clearest opportunity. Okay, I mentioned that before with the problems in the Ukraine. Well, that's going to kind of taint the outlook or the make it a lot more convoluted, at least. Let's say that from the Eurozone. So you might want to avoid trading euro dollar and look for something else. Then another thing too is like we know that dollar yen follows the stock market pretty closely. Okay, so that was another reason to look at the dollar yen, and we also had a technical level. All right, so there was a technical level here, which moved it actually a little bit over like this, and we're looking for a breakout. Okay, and you can see that the breakout occurred right above this 107 figure. Okay, so we have a trend line and we have the big figure at 107. We saw a push through that, and it hasn't even come back and tested that 107 figure since. Okay, so that's FX Bookie. That is what we look at. These are some of the trades. Okay. Also, like I mentioned, we looked at the euro dollar here, and we can see that we saw some follow through with that. Now this pop up here was based upon euro data that just came out this morning, stronger than expected. Okay, so that's where you want to that's where you want to look forward and be aware of some of the other things that are coming out, and book your profits before them, because you don't know what the data is going to be. All right, so or manage your trades accordingly. I should say that because you don't want to give back what you just earned based on other fundamental driver coming into the market. Okay. There's something I wanted to show here too. Like another thing that's kind of important. This is where you can really get down into some of the details. Is looking at some of the data here. All right, so let's say retail sales. Let's look at that. Let's go to retail sales. Okay. And start to get a feel for how much price moved. Okay, so start to get a feel for actual versus the consensus, and start to look at the chart. And see like how did price move during that time. All right, so if you see some bad numbers here on the 15th of July. Okay, well this is the June number. This is a typo actually. So this is a June number, and you can see that pretty dismal number here. All right, well how did that what was the outcome of that? What was the trade? How much did it move? This is 4/10 off. That's pretty big divergence. Okay, and then so basically come back, look at your chart, and start to get a feel for how much price moved at that time. I think I actually looked right at that one. That was on the 17th. Okay, so yeah, here this is where that took place. Okay, so get a feel for it. This is the first hour. Or half hour after that data, and get a feel for how much it moved. You can obviously see it looked like there might have been some other data that came out as well. This is a pretty massive spike, and it was just it held that for several weeks. Okay, but you can see it all started here. All right, and this was that retail sales number, I believe. Right, it was on the 17th. 15th. Okay, so yeah, maybe it wasn't. Anyway, just get the point is to get a feel for how much it moves. All right, so then it's more objective now, and you have a much better idea of how to trade the event, and then also how to look for pullbacks into that event. Okay, so if you see widely variant number, well, it's not going to pull back as harshly, right? There's going to be more traders that are going to want to start to enter based on the data, because they're seeing opportunity here, right? So that's kind of an important aspect to get down into some of the other details here and get a feel for it. It's going to take more work to do, but as you trade these events, you can start to see, wow, okay, well, price didn't react very much to it, even though there might have been a lot of variance in the data. Well, why is that? Is it, are they looking forward to something else? Maybe raising the debt ceiling like a year ago, that was huge news. Data didn't matter, right, at that time. You saw CPI or retail sales numbers come out. It didn't matter. It was all about the debt ceiling and what was happening there. Anyway, that's where this can kind of lie to you. So you have to be aware of that as well. But just try to get a feel for it, of like how much price moved compared to the variation in expectations versus actuals. Okay. How long after the events do you enter? Well, there's all sorts of strategies for doing that. We traded differently than a lot of people, and we try to get in as soon as we can. All right. If we miss it, then we start looking at our technicals for entries. Okay. All right. So if there's no more questions, then I think let's call it a day. And I'm sorry. Let's see. Okay, Bharath, I'm sorry. I didn't mean to skip over your question there. Just a minute, and I'll go through that. I keep hearing about deflationary scenario for the Eurozone. Yes. Okay. What does that mean? Well, they're having a hard time. I basically don't think their monetary policy over there is not working. They've been trying to stimulate growth, and it's just not happening. There's people aren't really more employed, and we're not seeing wage growth, and therefore we're not seeing any sorts of growth. And that's where you start to see deflation. Okay, Bharath? All right. Okay. All right. That's it. And everybody, thank you very much. And see you in the next one.